Hello everyone. Today we are going to see double entries bookkeeping. It refers to the system of accounting in which every transaction affects at least two accounts. This is the basic of accounting equation also. Recording dual aspects of business transaction in terms of debit and credit is double entry system. In accountancy, the double entry bookkeeping system is the basis of standard system used by the business to record financial transactions. This system is called double entry because each transaction is recorded in at least two accounts. Each transaction results in at least one account being debited and another account is being credited. Coming to features of double entry bookkeeping, every transaction has two-fold effect or a dual aspect. There must be receiving aspect and corresponding giving aspect. The receiving aspect is known as debit and giving aspect is known as credit. In every transaction, there must be two parties, the receiving and giving. Every debit must have a corresponding credit. The amount which is paid by the giving side is being received by the acceptor. In every transaction, the total of debit and credit are always equal. Any transaction of the business affects two accounts in the opposite direction. Here we can see the classification of accounts. Debits and credits are an integral part of the accounting system. Every financial transaction of a business has a double effect, that is, each transaction involves at least two accounts. One aspect of transaction is debited and other one is credited in another account. The debit and credit of the accounts are done on the basis of certain rules. These rules are called rules of journalizing, that is debit and credit. There are three accounts for the rules of debit and credit, such as personal account, real account, and nominal account. Let's see what is personal account. It is an account of a person. A person can be a natural person or an artificial, like companies. And what is the golden rule for this? Debit the receiver and credit the giver. This rule states that whenever a person receives benefit is debited by the amount of the benefit received. On the contrary, whenever the person gives the benefit is credited by the amount of benefits given. Coming to the real account, it is a record of an asset. An asset can be a current asset such as cash, it may be a fixed asset such as building, or it may be an intangible asset like goodwill. An asset is a current, fixed, or an intangible asset. It can either come in the business through its purchase or go out of the business through its sales. And here are the golden rules like debit what comes in, credit what goes out. This rule states that whenever some benefit in the form of asset comes into the business through its purchase, asset account is debited. Conversely, whenever some benefit in the form of assets goes out of the business through its sales, asset account is credited. Next, move on to nominal account. It is a record of expense or loss or income or gain. An expense or loss is a sacrifice of benefit in exchange for service used, and an income or gain is the benefit earned in exchange for service rendered. Here are the golden rules for this nominal account. Debit all expenses or losses, credit all incomes or gains. This rule states that whenever some benefit is sacrificed in exchange for a service used, its expense account is debited. On the other hand, whenever some benefit is earned in exchange for service render, its income account is credited. Hope you all understand today's topic. We shall see next topics in the next video. Please subscribe my channel. Thank you.